PM Modi talks to Putin, congratulates him on re-election. Leaders agree to strengthen bilateral cooperation. PM reiterates position in favor of dialogue and diplomacy. Conveys wishes for peace, progress, prosperity of Russia. Alright, let's get back to Indian markets, because Indian markets, they ended marginally higher on Wednesday and they were supported by select heavyweight stocks, your Reliance, ITC, SBI. I mean, they contributed to nearly half of what Nifty was able to gain today, and slightly favorable global cues. You know, the global markets, they ended their row and ended higher today. Even the the dynamics as far as the bond yields and the dollar index is also concerned, even though they picked up slightly, but the raise wasn't as high as what the market was expecting. Nifty today gained about 0.1% to end at around 21,830 odd levels. So essentially flat on a day basis. I mean, Sensex was flat, Nifty mid cap was flat, small cap was flat. So all in all, if you look at it, yeah, the market, it was a pretty inconsequential sort of a session. But don't let the numbers fool you, because it was one hell of a choppy ride today. And let me elaborate. Nifty today traded in a broad range of about 220 points. Now the index made a new low of 21,710. We have not seen these levels for over a month now. The last time we were here was back in February, mid-February. On the upside, Nifty made a high of 21,930 mark, which incidentally coincides with the 50-day moving average. The level, remember 21,900 was the level we had breached yesterday, and this was, by the way, for the first time in over 4 months. Now, if you have been following, this show, you know that this is exactly what we had put forth for you yesterday and this morning. I mean, we told you that since Nifty has broken below 21,900, it could correct by another 150 to 200 points. It did. We also said that 21,900 odd levels will become a resistance zone for the index going forward, and that's what happened today. But enough of patting our backs. Let's get to the big question. What happens now? I mean, look at the price chart. Nifty has formed a doji candle, which indicates indecisiveness in the market. It shows that both bulls and bears, they failed to pull the index to either side. I mean, so essentially we are at this crucial juncture where pretty much things can go either way. And I mean, if you really think about it, that's a perfect representation of where we are right now from a macroeconomic standpoint. The markets are awaiting US Federal Reserve's policy decision that comes out tonight. We'll hear about it and we'll talk about it tomorrow morning. And I mean, more than the rate cut, I think at this point, most of us will be focusing on what Mr. Powell has to say. And that is because I think that is a broader expectation. The markets are not expecting a rate cut, and that narrative of about a probably a rate cut happening in March itself was kind of silenced by the inflation data that came out for the month of February in the US. That was hotter than expected. But as far as Mr. Powell's commentary goes, if that is hawkish, maybe the bears take over, and if the commentary is dovish, bulls could perhaps take a charge. But what we do know are the levels. I mean, 21,700 today's low on the downside, in my opinion. If you are looking for a short trade, take position only once the index decisively breaks below those levels. And on the other side, I mean, bulls should wait for Nifty to take out 21,900, and that to take it out with conviction. Probably only then you should putting trades on the long side. But enough of me. Let's also bring on a real expert, a market veteran, Mr. Kranti Bhatini, equity strategist at WealthMills Securities, to get his views on the markets. Thank you for joining us here on News 9. Kranti, always a pleasure speaking with you. And let's start with a big one. We are awaiting the policy outcome, the policy decision from the US Federal Reserve. Do you think that, the Fed can surprise us, go for that nominal sort of a rate cut, just to test the market? What is there a possibility of that happening?
Suyash, I'm also crossed my fingers, but I don't think so. If we are getting any surprise rate cut, it's market is going to give a big thumbs up. But I don't think so, because today the ECB, European Central Bank, also expressed the same view. They are not in a hurry to reduce any kind of interest rate cuts, but what they are expecting is inflation can be controlled to the tolerated levels at some point of time. That's what the anticipation at this point of time. But I don't think so. Jerome Powell is going to be in a very much hurry to reduce any rate cuts at this point of time. If at all, if he is making any decisive rate cut, it's going to be definitely a surprising move to the markets, and we can see markets responding in a very positive way. But right now, what I'm looking forward from today's Federal Reserve outcome is, as you rightly mentioned, the commentary is essential at this point of time. What kind of forward-looking statements the FOMC chairman is going to make? It's extremely crucial at this point of time, Suyash, at this point of time. And also, the Japanese central bank also, they ended up the negative rate interest rate regime, and after 17 years, they've taken the yields into a positive territory. So that's also indicates the global economy is in a strong mode. The global growth is in a strong note, but central bankers are not in a hurry to reduce the interest rates at this point of time. Probably they might wait for some more time to get the things under control.
All right, central banks may wait for some time till inflation is, significantly under control. And I've been getting a lot of questions. Why is Japan going for a rate cut at a time when everyone else is looking for for a rate hike when everyone else is looking for a rate cut? I think it's essential to point out that, the situation over there and elsewhere in the world, it's different. They were battling with deflation for the longest of time, and finally inflation has gone above 2%. So that's why it makes sense for them to go for a rate hike, whereas everyone else, inflation has been the big problem. That's why they are looking to, wait and see how that picture pans out before going for monetary easing. But, moving on.
Yes,
Yes.
simple answer for everyone's confusion or everyone's analysis is, look at the movement of Nikkei. In the last 20 years, one will get the answer in that sense.
Right, sir. But, let's getting back to our markets. After SEBI, RBI is now raised concerns about froth building up in the mid and the small caps. This was in the monthly bulletin that the central bank put out. And let me just put out the quote there. They pretty much are saying stocks are riding an intense bull market, notwithstanding intermittent corrections, and this has been driven by broad-based boom. While large caps are gaining, mid and small caps are rising even faster, with hints of froth and spreading equity culture. The stress test, that did not raise any red flags, Kranti. So what's everyone fretting about here? All the regulators, SEBI, AMFI, now RBI.
Yeah, Suyash, I can't comment completely on regulators, because the regulators, when they're giving such commentary, when they say there is a froth in mid and small cap space, or in particular pockets, if they can be stock specific, that will help the retail investors to avoid such stocks. So because they have the data to back up what they want to indicate, but these kind of obscure statement can definitely impact the market sentiment at this point of time in the markets. As markets in a free market economy, what happens is the bubbles and the low levels can be taken care by market, because market is more forward-looking animal than any other thing. If there is a bear market in the markets, tomorrow regulator need to come and say the stock valuations look cheap, go ahead. So such a commentary they need to make. If the regulator keep on giving a market commentary, they need to look into those kind of situations also if needed.
All right. Do you think it's responsible, kind of, because or is it? Do you think that they are going with that approach? A stitch in time saves nine, because they are probably trying to prevent a broader collapse later on.
Absolutely. The regulator have taken the measures, even with respect to the equity markets also. The regulators have taken enough measure to control the the pace of the market. But still, sometimes if there are any excessive leverages or any kind of excessive irrational exuberance that has been building up in some pockets, especially stocks and PSUs, and what we witnessed some days, Suyash, fortnight back, how the stocks in a single day they have been rallying. So regulator have data to back up. Some kind of cautioning votes have given at the required time.
All right, and also wanted to get on this interesting report that I read, and I think we have spoken about it in the past as well, that economic growth in India is currently being fueled by subsidy-led growth, where government schemes such as PLI, credit subvention and direct benefit transfers are playing a more prominent role, and this is a shift from credit-led growth, where businesses and individuals borrow money to invest and stimulate economic activity. I mean, this sounds like a problem to me, Kranti, because I'll tell you what, we know that the government is looking towards fiscal consolidation, so they'll probably tighten their coffers post-election. Also, private capex has just not picked up. I mean, this could create a sort of a vacuum. What are your thoughts here? Am I looking at this the wrong way?
Not exactly. So actually, there is looking at the things half empty, or you are looking at the other side of the coin. But one thing we need to take is to stimulate the economy, to keep the pace of the growth. The government can take different kind of measures, okay, increasing the capex, and state governments can take the measures to increase the subsidies on various things, and also the direct transfers also helps the economy to keep the economy to boost. So here, the one issue one need to look forward is what quantum these stimuluses are coming and what quantum the direct benefits are going. So we need to take all these things into consideration. Overall, if the economy is doing on a positive note, at some point of time, we don't have again here, if there is anything extra, anything get into a frothy situation, anything get into a bubble situation, boosting too much of the liquidity also sometimes creates a froth in the economic growth cycle is concerned. So at this point of time, I don't think so. We don't have any such kind of bubble-like situation in the economy. The growth is at a track, and definitely, as you mentioned, when the private cycle credit is going to take place, definitely it follows the credit growth cycle is going to take place in the coming quarters. We can expect both the capex from the state and also from the private companies that will the corporates also increasing their boosting the spending is concerned over a period of time. So I don't think so. Yes, your data is correct. What you mentioned is, but I don't think so. There are no excesses in the economy right now, and our CAD is under control. And one way, Suyash, we need to take into cognizance the increase in the tax income for the government. One is the advance tax collections have been going up, the indirect tax income is going up, the GST has been month on month going up, and also the direct tax collection also going up. So the economy, the shape of the economy is in a perfect state at this point of time. That's where we are deriving the 7 to 8% growth projections. We are not in a territory where China is to climb. They are going about 10% growth rate. Those kind of situations are the bubble-like situations. And also the infrastructure spending also, we have a lot of delinquencies. So we are meeting the demand. It's not going, the supply is not above the demand. We are at par with the demand at this point of time. So I don't think so there are any kind of bubble-like situation in the economic growth of India is concerned.
All right, but sir, I mean, we have been talking about this for a while. You know, the private capex is just not picking up. And with that in mind, do you think RBI could jump the gun and maybe go for a rate cut come April instead of, taking and waiting for cues from Fed? Because, I mean, a low interest rate environment could probably compel private players to borrow more, right?
Yeah, what you said, Suyash, is absolutely correct. But there are certain things one need to maintain the currency and the inflationary kind of situations also extremely important for the RBI. And also the inflation should be under control. And also the global policymakers the pace, of course, India have a headroom. We never had a resigns like the zero interest rate policy. That's where when Fed has been increasing the interest rates in the previous cycle, interest rate hiking cycle, whereas the RBI could able to maintain the status quo. That's where we have the edge. But still, as you mentioned, we have a further legroom for RBI, some legroom for RBI to take a measure which is going to create the extra liquidity to the economy. That measures are still there, but I don't think so. RBI is in a hurry to take those kind of measures at this point of time. They want to balance. It's a double-edged sword. Suyash, maintaining one hand, keeping up the growth, and the other
Right,
hand,
sir.
a country like India maintaining the inflation, which is extremely crucial. It's a double-edged sword. So the RBI, well, I don't think so. RBI also not in a hurry to take measures to increase the pace at this point of time.
Alright, it is a double-edged sword trying to find the correct balance between maintaining and keeping inflation, within a reasonable zone, between their comfort zone, as well as, keep the growth as well intact as well. But sir, always great insights from you. Thank you for joining us and giving us your thoughts here on News9.
Thank you, Suyash. Always my pleasure to share my views with you.
On that note, it's a wrap on this edition of Last Tick, but stay tuned with us as we'll be right back with Business Plus.
Start with the end in mind. You need to know where you want to reach. Every morning that we wake up, we are exercising our choice. The destiny is decided. The results are known.